I did want to ask you a question. What was do you remember that MentFX video that we were watching?
Which one?
Um where he's explaining why smart money concept will never die out. Can you re-explain it to me, cuz I don't remember like what he was saying specifically.
Okay, so basically, right, ever since the markets were made, ever since the markets were a thing, there's always going to be that element of manipulation because there's always going to be somebody, something, some entity with more money than everybody else, right? With more capital, with more ability to control the markets as everybody else. That's why you have Richard D. Wyckoff, right, with manipulation concepts back in the 1800s. Because it's all the same. There's always going to be that big person, that big whale, that big entity, and that's why he's saying it's not going to change because it's always going to be that search for liquidity, the big person versus the small people. To put it as like simple as possible.
Right.
Yeah. I'll try to find that video though and link you though. But yeah,
Wait, that was the answer?
that was literally it.
Oh.
It's as simple as that. There's always going to be bigger money, and bigger money is always going to be seeking liquidity. That's just how the market moves. There's You don't make money in this market, you can only take it, right? So that's all that this market is just buying and selling. For every seller there's a buyer, but you obviously have the one big money who is going to always be selling and buying against themselves because they cannot cover other
House.
positions, but they still need to make liquidity, right? So they're targeting that retail.
The house.
So the big money. But yeah, I got the recorded started. Thank you everybody for waiting patiently. We'll get this started right now. I'm gonna go ahead and get into Bitcoin and ETH. We'll just clear the chart, go over to some TA with you guys. Just mark it all out when we get started. After we do that, we're gonna get into the disproval theory again. We'll do it on some candlestick charts with some plays right on GJ, and look at how we can actually get into certain trades and prove ourselves wrong to know that we want to be wrong, right? For certain reversal situations or understand what type of trend we are in. And I also talked about time and price. We'll get into that a little bit. I'm not going to teach too much about time and price, right? If you want to learn all of the concepts, right? Obviously, you got the 2022 ICT mentorship on YouTube. I'm not here to teach ICT, but I am here to show why I use time and price very, very importantly, right? A lot within my trading style. And then after that, right, we're just going to talk about some simplicity with everything that we talked about today. We'll just bring it in together, bring it into one thing, and make it simple, right? Make it a little step by step plan, set of analysis, so you're in there looking for the same thing every single time. So let's go ahead and get into Bitcoin now. We did analysis on it the other day, right? We're still actually within that range that we were 2 days ago when we had done our stream before. So the sentiment really has not changed for myself personally. I have not seen anything too right too much of a footprint, some displacement, something that's telling me the market wants to go a certain way. Obviously, we have been manipulating highs as we are coming up this range and taking lows. This gives me more of a distributive behavior, right? But we still need to see that displacement, or at least I do personally, for that break of structure downside to show that supply introduction so then I can look to take any types of trades. Right now, I'm just going to be playing the structure, right, as it is given as we are moving up this range. So as we are looking at structure, right, doing our daily closes on our daily time frame, we have a high, low, break of structure, right? After this supply zone, we liquidated the lows, right? Broke structure upside, and then from that created a higher low, another higher low, and then continued to the upside. That's where we ended up breaking structure out of this range right here. And then we created that range that we had marked and talked about before, right? From that liquidity, go ahead and get rid of that. From that liquidity rate to the downside, demand mitigation, and then we saw that large move to the upside. Now this is our higher time frame, right? Daily range that we are in. You can see we are in premium, manipulating highs, right? Leaving those lows that are very, very present, showing us that retail is possibly getting into these trades, trying to take this to the upside, right? They see a lot of space up here, whatever it is right now. Trying to continuously long this to the upside. We could see a purge, right, to the downside like we were talking about before, into this area of imbalance if we don't see displacement on this move to the downside right here, right? If we do not receive displacement to the downside that breaks structure with force, and we continue to build buy-side liquidity, right, as we're coming down into these areas, and then we see a manipulation rate to the downside, maybe demand mitigation, break of structure upside, creation of demand, then we can look for possible trades to the upside, right? But right now, we need to play our most current structure as it is given to us. And looking on this right now, right, obviously we're within our range. Let's go on a lower time frame now to see what we are looking at, where our next imbalance lies. Right, obviously we see a low that caused a high. Where's that high breached? Right here, right? This low caused that. So we have an area of possible demand on the 12-hour that we have marked right here, with imbalance just above as well. We can see we created liquidity before we tapped into this area. Now, nothing has shown me too much, right, that we want upside just yet, but we are still showing that bullish structure, that bullish narrative, and I'm not getting tons of displacements until we get to lower time frames, right? That's when we are starting to see some type of algorithmic introduction with these displacement candles to the downside. Now, these could be doing two things, right? One, breaking structure to the downside, creating supply, or two, inducing, right, shorts to get into trades, building buy side liquidity as we come into these areas of demand, liquidate lows, right, break structure upside, and then continue our bullish trend that we have put in right now. Overall, right, we are still bearish on the weekly. We need to understand that we could literally come up to areas as high as 29, right, and even areas as high as 37, and still put in a overall bearish narrative, right? The reasoning from this is our range that we have created over here, right? We saw that break of structure downside. What caused that? This redistribution, this higher time frame redistribution. We can see the liquidity rate to the upside, right? Took all the early shorts out of the market, mitigated that area of supply on the weekly time frame. That caused a new low from this move to the downside right here. And then from that, right, we saw that move to the downside. So this is where that supply introduction, right, came from on the higher time frame. So we realistically could come up into these areas and still be bearish overall. Now, we looked at our lower time frames, right? We're waiting for that algorithmic introduction, whether it is a break of structure to the upside, right, with displacement, with an impulsive move to the upside, showing me price wants to move to the upside or the downside, right? This is where it gets very, very simple. And we talked about our disproval theory in our last stream, and this can be literally applied to this right here, because we can see as we are coming up into these areas, this is our 4-hour chart. So as we break structure to the upside, right, we are mitigating demand, pushing higher. As we break structure to the upside, we mitigate demand, push higher, right? So we're starting to take care of a lot of demand and mitigate a lot of demand. And it's not showing us a lot of impulsive moves on these moves right here, right? Versus something like this where we break structure with force, leave an imbalance, leave an area to come back to that shows some type of algorithmic introduction, right? So as far as Bitcoin goes, I'm literally waiting for it both sides. As far as internal structure goes, right now our 4-hour is bearish. From this move to the downside, this low caused this high, right? We breached that low, so we could see this low taken out right here, or we could continue, right, to hold this low that caused a new high. This is where it gets very simple, as I was talking about before, with the disproval theory, because we literally have two options in one area. One, right, we break structure, continue to the upside, or two, we don't, right? We continue to the downside and liquidate the lows. It's as simple as that, right? There is one spot that we are looking for, and if we get a break of structure to the upside with impulse, then we're looking for upside. If we get a break of structure to the downside with impulse, then we're looking for downside within our internal range, right? That is how that disproval theory is going to come to mind. Just make it simple, right? So that is Bitcoin, right? ETH, obviously very, very similar. I had this drawn out from a supply zone and a lot of buy side liquidity we had here. I don't know if this hits, right? This was just me looking at these areas, seeing a lot of buy side liquidity, seeing our bullish structure, saying, hey, we could possibly mitigate this area of demand, right? Continue higher into the supply zone. What is this going to do? Take everybody out of their shorts, right, from this redistribution that we had seen right here. And once everybody is out of their shorts, right, and we mitigate that area of supply that caused a new low overall, then we can still see that continuation to the downside. Now, same thing with Bitcoin, as I was saying, right? We could easily come up to these areas and still break structure or continue our bearish trend overall on higher time frames. But we have a daily demand zone from this low that caused a high right here. We can see this rally-based rally, this reaccumulation that had occurred right here. We can see the lows that were taken out, and then another move to the upside. If I go to lower time frames, Same exact scenario, right? We see the lows taken out right here, that break of structure upside, another break of structure, we come down, liquidate lows, and then continue to break structure to the upside, showing that demand introduction, leaving that imbalance as well. And as I'm looking at this, right, we're looking for lows to be liquidated, that show of that buy side liquidity being built as we come into those areas of demand. If we are looking for those continuation longs to the upside, like I was saying with Bitcoin, same exact scenario. We're just waiting for displacement within these ranges. There is no need, right, to go and force yourself into trades. Yes, if you are experienced and you can trade the lower time frames within these ranges and you're hitting them right and you're managing risk, then go for it. I'm just explaining this right for the people who are trying to learn these smart money concepts, quote unquote, and try to overcomplicate it, right? When really all we have to do as smart money traders, as quote unquote institutional traders, right, is wait for all the early longs and the early shorts to be out, wait for the final break of structure with impulse, and then we are in our trade, right? That's as simple as it is, so that we can not get in with retail, right? Not get a twisted mindset, not understand what is going on. Instead, we have one simple narrative that is shown to us that we were waiting for, right? Or was disproved. So then we have another simple narrative to show. So that's how ETH goes, right? I'm going to go ahead and show the disproval theory now. Again, just the theory, and then we'll get into GBP JPY. As far as the theory goes, right, we went over this a while back or on our last stream, but I'm going to go ahead and just re-emphasize what it is. So we have price moving to the upside, right? Let's just draw something out. We have a demand zone. It mitigates the demand zone, comes down lower, accumulates, right? Liquidates lows, continues to the upside. Then it comes up into these areas. We have demand zones down here, right? Demand zones down here. We are within this structure right now, right? And then we break structure to the downside, continue to the downside. So the simplest way of the disproval theory and how it works, right? Break a structure upside, what caused that? We have a demand zone, right? Price is moving higher. We have our next area of demand, right? Next area of demand on another reaccumulation, holding one right here as well, right? And you notice after we break structure to the upside, mitigate demand from here, and we're taking care of demand within these areas, we start to move higher, right? And then we start to leave demand behind. And then we get to the point where we leave more demand behind, create lows, right? Start to manipulate those highs like we were talking about with distribution. And then we break structure to the downside. So now that my bullish narrative has been proved wrong, going the entire way up, long, right? Long, long. And then we get up to this point, it comes into this zone looking for confirmation. What happens? Displacement to the downside. Now instead of looking for longs, right, from that displacement to the downside, now I have a structure break, an area of supply that was created from this displacement candle to the downside, and then I can look for my confirmation, right, within that zone after we break more lower time frame structure to the downside to then take this trade to the downside. That's how we can disprove ourselves from getting into a certain narrative, because we will be right until we are wrong if we are on the right side of the chart, right? So that's the theory of it. Now let's go into the actual trade that was taken. Same exact scenario, right? How it was taken, how it was even looked at. This was on a 15-minute chart, right? From an hourly to a 15-minute that this was taken. So understanding that this is actually a counter trend play that occurred from this move to the downside, right? The trade was actually caught within here, a couple candles within here. Understanding that this low caused a new high, right? We saw this move to the upside. And then we saw price come lower into these areas right here, right? Break more structure to the upside. Let's go to our 4-hour time frame on higher time frames, right? So what does this tell me? That this high, right? This high right here did not cause a new low, and we continuously broke structure to the upside. This tells me that we are possibly in a reaccumulation scenario, right? Respecting demand, and overall, right, we are still in that weekly bullish structure. We can see all this buy side liquidity that is being formed within these areas. We are also creating a lot of sell side liquidity, right? But we are still going with our narrative. So let's go ahead and talk the disproval theory now and how it was applied to this trade. All right, so internally we can see that this high caused a new low. It did not, right? Internally, yes, this high caused a new low. Externally, it did not, right? So this is a valid area of supply, but is it a valid area of supply for me to take this trade to this low? right? No, it's not. We need to be feasible within our range, right, that we have. Look for the liquidity within, look for the unmitigated supply and demand within, and then we can start to play our structure, right, within as well. So to understand where I was disproven, right, and where I was able to actually get into a trade was from this scenario right here. So we saw price came into these areas, right? Saw this move to the upside, this impulsive candle to the upside. Where's your candle before that candle, right? That broke that structure point out of this zone, area of demand. Right? Exactly, same exact thing we were looking at before. So now I have an area of demand, I have an area of supply from an internal high that caused a new low. So we can see we came up into that area of supply, right? Mitigated that, confirmed that when we broke structure to the downside from the demand zone, right? As well as we can see structure points. We came up into this area, broke structure once, right? And then we broke structure twice, came up into this area of supply, and this is where it got very interesting, right? So let's go from the 1 hour to now the 15-minute. We can see where price broke structure. Let's bring this to the back a little bit to not get everything confused. But we have our demand zone right here. Came up into that area of supply. We saw a liquidity raid to the upside, right? So we took out all the early shorts like we were talking about before. Now that the shorts are out of your trades, right, we're looking for the structure break to confirm an area of supply or demand. Right, we can see that this low that caused this high, this liquidity raid to the upside, ended up getting broken, right, to the downside right here. And then we are looking again for the confirmation of that. So we're waiting for now that the hourly, right, put in that change of character. We're waiting for that 15-minute now break of structure to the downside to confirm our hourly lower high within this scenario. So now what do we see? Price come up into this area, right? Raid highs still respect this high now that broke this demand zone. Okay, so we respected this high that broke this demand zone to the downside. And then came up into these areas, rated liquidity, and then we broke structure to the downside, right? Here's one, right? If you're looking for the low, so we came down into these areas, broke structure, started to create a bottom, broke structure again. So we have an area of redistribution, right? From that 15-minute double break of structure, we can see price traded up into that and then traded lower from that. Now, this is where many traders will get confused, right? Because they see this move to the upside and they see price still respecting this low right here, right? They see price still respecting this low, and they're like, well, this is the low that caused a new high, or this is the low that caused a new high. We need to understand what actually caused this high. Where's the most recent demand zone, right? Recent supply zone that actually caused this move to the upside. And we can see price came into these areas right here, right? Where's your candle before that? Reaccumulation, area of reaccumulation, right? We came into those areas as well. Broke that structure point or that demand zone to the downside. So now this entire move from here on up, right, has been canceled, right? This entire move has been canceled. So now we have an area of supply, right, to look for on the downside now that price is coming to create a lower high. So we had a higher low, right, broke into the downside right here, break of structure, and then we created that lower high, came down into those areas lower. This is how we can start to look to get into these lower time frame trades. Now we had our 15-minute, right? We can look for our 5 following. So we came into this, right, candle before candle. If you wanted to refine within these areas like we were looking for after the mitigation of supply, or if you wanted to wait, right, for that lower time frame structure to come into narrative. So we can see again, this 5-minute came up, rated those highs, right, and then broke structure to the downside, showed this displacement candle, and then where were we, again, creating an area. So let's go back to the 1 minute, or from the 5 to the 1 now. We can see what happened within this area as well when we came into this area of supply. So we rated this high, right? This low caused this high right here. And then we came up into this area, and this is where it got very interesting, right? We're like, where is the actual introduction of supply within this trade? To keep it as simple as possible, remembering our strong highs and weak lows. So a strong high or a strong high or low is a strong high or low that produces a new high or low. So it makes a new high. A strong low is a low that makes a new high, right? And a strong high is a high that makes a new low. Now, what is your weak highs and lows, right? For a weak one, they do not produce it. So we can expect, right, that area to be taken out. So let's look at this and understand what happened right here. We came up into this area, rated liquidity, right, and then we came and created a low right here. So price is showing bearish minute structure right here, right? And then you might look at this and say, hey, well, did this break structure to the upside? Yes, it did internally, right? It created internal demand within this area. We can see that we actually mitigated that, right? So I honestly believe, right, and I always say this, that everything happens for a reason. All this price action that is here happens for a reason. We can see it came up, right, rated the highs, started to come lower, created liquidity, came up into these areas, right, that sell side liquidity. This is getting people in longs. They saw this large candle to the upside on the 1 minute. Now they're looking at this, right, and they see this break of structure right here, and then they see price move lower. So if we look right here, we can see that actually this low, right, that was created right here, did it cause a new high? It did not, right? So this was an internal move to the downside. It did not cause a new high right here. And then what happened following? We had one move to the downside, right? Lower time frame break, right? And then where's your second one after that low was created? Given right here, right? So exactly that same area as before, we can see that double break of structure, introduction of that supply. And I now have a available trade, right, on my minute time frame from this redistribution that broke this zone right here. Looking for shorts, right? Your first take profit could be this area right here, right, for a 3-to-1 from this week low. This is where you would set stops, where I would set stops to break even after this low is taken out. That would show me that this area is an area of supply that should be protected from that introduction, right, of supply from our higher time frames to then lower time frames. And then now let's look where we would target next. So now understanding this, right? So now looking at this higher time frame picture, did this low cause a new high? No, it did not. Did we break structure to the downside and introduce supply? Yes, we did, right? So now we have that narrative, that picture that is being shown to us, taking it down to the bottom of the range now, that range liquidity that is available right here. And then overall, right, that demand zone that actually caused that break of structure to the upside, looking at areas down here, or this candle right here with an imbalance that was right before that impulsive candle that broke multiple structure points to the upside, right? But you're available, right, with an 11-to-1. Let's go down on lower time frames, right? That 11-12-to-1 that you are given within these structural narratives, right? We're just looking for the same thing over and over again. What low caused the new high? Did it cause a new high? Ask yourself why, right? Constantly. Why did price do this right here? Well, we can see that this low didn't cause this. So why did it continue to the downside? Well, like I just said, right? This low didn't cause this new high. So it started to move to the downside. We can see where it broke structure, introduced supply, and we see now why price is respecting areas that it does. And we can see now or get into instances now where we can say, well, if it passes this low, right, or if it does not pass this low, then I'm going to be out of this trade, right, because my structural narrative is not showing me what I want to see due to this high causing a new low, introduction of supply, right? If that's disproved, then I now have an area to look for possible longs overall, right? So using that disproval theory, disproving yourself, making sure you're wrong, right? Because it's okay to be wrong. If every trader was right, then we wouldn't be here right now, right? That's just the cold hard truth of it. But looking at this and understanding that we are respecting supplies, we are moving up, respecting demand as we move up, we create more demand, unmitigated demand within these areas, and then we create our next area of demand from this high right here. What happens, right? It breaks that demand zone, so I now have an area of supply. And then we can confirm that, and then I now have an available trade to take, right? Technically, overall, if this internal high, right, caused an internal low, we could see price come down to these areas down here, but we're going to just play, right, the most feasible take profits within our structural narrative in here, right? So that same exact thing, right? Keep it super, super simple. This low did not cause a new high. We broke structure to the downside. We're respecting supply. I'm just looking for that now on each time frame, that same exact behavior over and over again. So now that we looked at that, right, we can talk a little bit now about time and price. So as far as manipulations go with time and price, to keep it as simple as possible, to give you guys a logical kind of analogy, um, has there ever been a time where you go to sleep, put your trades in, go to sleep, and then wake up stopped out, right? And then you flip your trade and decide to go long, let's say if you're in a short, and then you get stopped out again, right? And then now you have this crazy, crazy narrative and you don't actually understand what's going on. You think you're not hitting, right? And that's that manipulative simplicity that I'm going to be talking about with time and price. When there are traders in sessions, right? Because there are traders who will sit there and trade each session or hold a trade after the end of each session, right? Where are they going to put their most feasible or stop losses within that session if they're looking at that session, right? Session highs and lows, as well as what they believe to be protected highs and lows, the high and low of the day, right? And they go to sleep and they're like, I'm good. They wake up stopped out, and then they do what we talked about before, right? So that's pretty much the most logical, simplistic ability of time manipulation that I can give to you guys, right? Because obviously we cannot control time, but algorithms can manipulate that time, right? So then you are not understanding each daily bias every single day, and you might come in and you're like, I have no idea what I'm looking at, right? So understanding that that is what time and price essentially is as far as manipulations go, we can now look for when that will occur, right? We talk about volatility within the market at times of news within 8:30 in the morning, right? As well as 9:30 opens, certain session opens, certain session closes, Tokyo session open, right? All these different sessions open when volatility is supposed to come into the market, when we can actually look for larger moves and look to catch larger moves, right? So what I mean by this is we saw that entire structural narrative that we had just played out, right? That entire structural narrative that we had just played out. Now let's go into our lower time frames again and look when this was available. So we talked about that 8:30, right? News drop every single morning. That's why we look for it, right? That's why we look for volatility in the market then. So we saw we broke structure, right, to the downside once, saw we broke it twice. Where's 8:30? Right? Boom, 8:30. What happens on 8:30? A liquidity rate to the upside. What does this get everybody to do? What does this get all of dumb money to do, right? They see break of structure upside, they're on their lower time frames, whatever it is. Right? They see demand zone, long, 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 long. It comes into this area. They're like, I'm gonna long this, right? Break a structure to the upside. It's coming down into this area. I'm gonna long it. What do they do? Put their stops underneath this low. Where does that liquidity seek? This low right here, right? Displacement right into those areas. So retail, right, gets that, or the uninformed gets that mentality to where they believe it can't continue to the downside, right? Or it can't continue to the upside. It just can't. There's too much space, whatever it is, right? They see these lows and they're like, it's not going to do that because we had this huge move to the upside right here. This is the most protected low, right? If I'm on lower time frames, trading a session right here, I'm in a long right here, and I set my stops to break even after I take profit. Or I don't, and I set them underneath these lows, or I try to hold, right? I'm like, I'm going to take this all the way up into these areas of liquidity, but that's not feasible yet, right? We need to have that structural narrative to show us that, to tell us that we actually can get into a scenario, a winning scenario, right? Because then what's that going to do? Just breed confidence, because now you're looking for the same thing over and over again. And then once that is hit, you're in your trade, out of your trade, completely good to go. That's how we can start to walk away from these trades now, right? Because once I'm entered within this lower time frame trade on the 1 minute, and I get that confirmation of that lower high and that lower low, right? We came into this area and we caused a new low. And then we came back up, rated liquidity, caused another low. So more supply was introduced within this area right here, right? So even if I didn't catch this trade right here, I could have waited for the 1, 2, right? That second break, we rated liquidity, came back down, displacement. Where's your candle before that candle that broke that structure point? Right? Exactly right there. Same exact thing. Waiting for that confirmation to come within these areas. Taking out the early shorts, right? This is a lower time frame narrative, so if it will allow me, which I think it will. We can pull up the seconds real quick. Accumulation, right? We can see us manipulating the lows to then distribution after we take out the highs, right? Create that area of supply. Same exact fractal nature, right? We can see that this low, after we rated liquidity, or sorry, this demand zone after we rated liquidity to the upside was broken to the downside. So this shows me that this is a liquidity raid and not a impulsive break of structure to the upside, right? What do? Come back into that area and then continue to the downside. Create another low. We're looking for a lower high, and then we create that more downside, right? So now that I have that structural narrative that is given to me from more supply creation, I can have my stops to break even almost instantaneously, right? Let's go back to the 1 minute. And once that new low and that lower high is confirmed, right, and we're at this point in time, so let's just draw the timeout for this. All right, I'm break even within 10 minutes, and I'm walking away from my trade, letting it hit my take profit, right? That's what we want as these institutional traders, is to be able to get into these situations, walk away from our charts, and be confident that it is going to go in our favor, right? And if it doesn't go in our favor, not be upset about it. Because this happens a lot. A lot of people, a lot of smart money traders, I did this to myself, right? A lot, and I still sometimes do this to this day, right? Is overcomplicate it. And that's probably one of the easiest things you can do as a quote unquote institutional trader, because you see all these words, all these phrases, all these concepts, right, thrown at your face, and you're like, well, which one do I use? Which order do I use it? How do I use it, right? How can I actually apply it? But that's going to come through that comfortability of actually going back, right, and reading the charts for how they move, asking yourself, why did it come up into this area, and then break structure to the downside, right? Oh, it just rated the high, showed a displacement to the downside, right? So we broke more structure. So I'm expecting price to come up into this area, create a lower high. If it confirms that, right, then I can look for trades to the downside. What did it do? Confirm that. Created a lower high, right? Confirm that. So we can look for prices lower within our range. It's just understanding, right, that we don't have to be in a trade 24/7. We can wait for that narrative to come up, right, and then we can catch those 1 to 11s, and we are completely good, right? I'm good for the week at that point in time, because realistically, and I'm just speaking from a like a funded perspective, right? Realistically, you really only need 2.5% a week, right, to start to actually grow that. So if you're making an 11 to 1, right, 10 to 11% on your trade within a day, why do you have to trade more? Why do you have to do that, right? We need to keep ourselves disciplined, and we need to understand when there are situations that we get that euphoria, right? Because every human has emotions. It's not something you can avoid, right? But it is something that you can tame. It is something that you can work into your lifestyle, right? Work into your ability if you understand it and understand yourself. Look yourself in the mirror and say, yes, I overtraded. Yes, I did this. Yes, I did that, right? Because at the end of the day, no matter how hard you willpower, right, the market, no matter how long you sit in front of this and try to create a narrative that this was going to continue to the upside when it came into these areas, right? At the end of the day, the market is going to move how the market is going to move. So why not wait, right? Why not wait for the final break of structure, so then I can be in that trade that I don't have to worry about, right? What is so wrong with that? There is nothing, right, within that scenario that I am upset about, right? Unless I am wrong within this trade. But do I get upset? No, because we have a break of structure to the upside. New opportunity comes, right? We can't get upset with ourselves if we are wrong. We just need to take those as learning opportunities, right? If I was wrong within this trade and tried to long it when it came into these areas, but tried to take it to this high right here, right? I look back, oh, this high caused an internal low. Supply was created right here, right? So why would it continue to the upside if we mitigated supply and then broke structure to the downside and introduced supply, right? Why would it actually continue to the upside? Now I have a lesson learned, right? And instead of getting mad at it, I take a screenshot of it, I put it in a Notion, I put it in my own personal Discord, and I go look back at it, because now the next time this occurs, I'm saying to myself, that's not going to happen. I'm going to know exactly what's going to happen, right? The next time it comes into this area and shows this type of behavior, I know what to look for. And then once that's given, right, that behavior is given, then you're in your trade walking away, and right, and now you even have more confidence because you've seen it, you've experienced it yourself, and you've been in that situation, to where you got stopped there or to where you were wrong, right? I'm wrong plenty of times. With these institutional concepts, there are many, many scenarios where I'm stopped out once or twice, right, before this trade even comes into play. Or I'm not, right? There are scenarios where I catch it on the first move. It's just about getting that confidence, right, to notice what is happening within these trades, notice the actual structure that is forming, where supply and demand is shown, right, where the highs and lows actually occurred, and just taking a deeper look at the candlestick price action, right? And this is why we take away, or I take away those indicators, is to show me that structural narrative, to show me that story, right? Instead of having all of that noise. Obviously, I did trade with indicators, right? When I first started these smart money concepts, which I'm not bagging indicators. I have a video on indicators and how I actually believe they are helpful, but right, I take them away, so then I allow myself the ability to come to the chart, right? Look for the same exact behavior that allows me this opportunity of profitability within a small amount of time. Right, so let's draw this out. We came down into these lows, right? Roughly an hour that I was able to make that 1 to 11, right? Within this trade. And you're completely okay with that. Now, if I was waiting for this for a week, right? I made that 8, 9% on my port, 10%, 11% on my port, right? At the end of the week, is that more than 2.5? Yes. That was amazing. I just had to wait for this one opportunity, right, within lower time frames from some breaks of structures to the downside to be able to get into this trade. And now I don't need to trade. Now I don't have to trade, right? I can go away. I can go sit down, and then that brings good habits as well. Because anybody who is sitting here trying to will the market in their way, or just constantly on charts, right, you are going to be burned, and you are going to get what is called that analysis paralysis, right, where all of a sudden everything that you have learned just mumbo jumbles right in your head, and then you're like, I have no idea what I'm looking at. I'm longing this, shorting this, and then you start to overtrade, and then you're like, I'm on the minute time frame, what even happened, right? And we get into these crazy scenarios, but just utilizing the understanding that the market is going to move, or the market is going to move. The same thing with the wave analogy, right? If you are a surfer trying to surf, right, and you go to the beach and there are no waves, are you going to surf? Is that possible? Can you even go out there and surf? No. So if you come to the charts and that wave isn't present, that move isn't present, that footprint isn't present, are you going to be able to get into a trade? No, because all you're going to do is get into some type of trade that you think, right, that's moving your way, and then you get stopped out, and then you think you're bad, and you don't know what you're doing, right, and you blame it on yourself. But at the end of the day, right, you just didn't utilize enough patience to wait for that final break of structure, to wait for that final mitigation of a institutional candle, or that final manipulation, right? It's just utilizing patience, really, at the end of the day, waiting for it to come to light, waiting for it to show it to you. Because even if I missed, right, like we were talking about, that mitigation of this candle right here, or even missed the mitigation of this candle right here, right? Displacement to the downside. And then we had an area up within here on seconds, right? And then we came down more, broke more supply, came up, respected that, right? After rating that high. If I wasn't in over here, if I wasn't in over here, if I wasn't in over here, right? If I wasn't in over here, I still have that opportunity, that profitability opportunity on lower time frames to wait, right? Because I can wait for now this move, or even this move. And try to catch a lower time frame move to the downside, right? It's just about utilizing that patience, because now we have that opportunity of profitability. I don't have to catch, right? Like we were talking about within last stream, this entire move to the upside. I can catch this move within this candlestick right here, or this move within this candlestick action right here, right? And make exactly what I need to make for the week or for 2 weeks, right? Just by utilizing that patience and obviously those lower time frame confirmations within those areas. But that's just how we can keep it simple, because now I know I don't have to trade. I know I don't have to be at the charts all the time, and I know I'm only looking for one thing, right? At a certain time as well. So we talked about that 8:30 price like I was talking about. I'm looking at I normally trade only London and New York now. So as far as London goes, right, we see that London opening at 3 a.m. We see price start to move, some volatility come into the market around those times, right? And then we start to see some moves because there's that influx of traders at that time. I'm going to go ahead and take a look at stream chat. As far as time frames for waiting for breakout structure for confirmation. And yes, I do market orders only. But as far as the time frames go, I'm gonna go ahead and send this photon, right, little sheet that I have as far as what I look for. But personally, my favorite, right, and the ones I look to trade the most are going to be swings from the daily to the 1 second, right? The 5 second, the 15 second. Meaning, right, once I have a daily break of structure, I'm looking for the 4-hour to break structure after creating an area of demand, right? So if on our higher time frames, our structure is bullish, right? We have a bullish structure on the daily time frame. Our lower time frames are going to hold internal structure, right? So on the pullback of this higher time frame bullish structure, higher low, higher high, higher low, higher high, we're going to have 4-hour bearish structure on the pullback, right? What does this do? Create that buy side liquidity, as well as get all of the early longs who long this breakout, right, to the upside right here. Whoever longs that puts their stops underneath these lows, these lows, these lows, these lows, whatever it is, right? Once they do that and they're taken out of their trades, what does that do? That gets them into going short, right? So now that they are going short to the downside, on this move to the downside right here, what does that do, right? Creates buy side liquidity. Now we have an available target, right? A reason to move up, as well as mitigating that demand zone and breaking structure. So now that my 4-hour has switched bullish after coming into that area of demand, right? So I now have a low, high, and then I have a low, and then a higher high created, and then a higher low created. This overall trend is now within harmony, right? So now my daily and my 4-hour trend is within harmony. So instead of just targeting, right, after I take a long position within these areas, instead of just targeting a high like this, or even the weak high right here, or a supply zone internally, now that my higher time frames to then my lower time frames are confirmed, I can hold for that entire narrative, right? So meaning, once this behavior is shown, I literally go from the 4-hour to now the 1-hour. So we have this impulsive move waiting for the 1-hour to switch bullish after coming into these areas. Once the 1-hour switches, I'm waiting for the same exact behavior now on the 15-minute. Once the 15-minute switches, same exact behavior on the 5. And then from the 2, 1, right? And then from the 1, 15 seconds and below. And that gives us the ability to now get into this higher time frame trade, but with way less risk, because now I am longing, right, something that looks like this on a higher low that is protected on lower time frames within here, now that I have all confirmations from higher time frames to lower time frames. But you do not have to trade like this, right? You do not have to swing like this. This is personally how I like to enter trades, right? Because then I get that opportunity of profitability, higher time frames, right? And I'm break even. Break even almost instantaneously, right after coming into these areas of demand, and then we see a large impulsive move, and I am completely fine. I can hold for that higher time frame narrative, and I know that I'm going to make a lot of profit off of that, right? Global was asking me, when selecting fair value gaps, if available, do you only choose higher time frame ones or ones only in a premium level above the 0.5 fib, including imbalances? So when I select fair value gaps, this is actually very interesting that you brought this up, because my personal method of taking trades, right, those candle before candle that break structure to the downside, you will see actually that candle, that displacement that is given is actually the fair value gap, right, that we end up seeing within some ICT models, right? And what I mean by this is when I'm looking for fair value gaps, I only tend to use lower time frame ones. And the reason I only tend to use lower time frame ones is because it's following a liquidity raid, right? After a break of structure and impulsive move. I'm not looking for the higher time frame one. The meaning of that, right, is let's go to a 4-hour chart. And let's look at this right here. Obviously, this is a 4-hour fair value gap, right? But what I want to personally, right, I don't want to risk this coming into these areas, and I understand imbalances as areas that can be filled. They don't have to be filled, but they can be filled, right? Eventually they will be filled. But they do not have to be filled, right? So I'm not automatically longing when it comes into this area. I'll wait for it to show that area of fair value, as well as, right, that institutional candle that caused the high. So after the liquidity raid, the actual introduction, right, of that demand that caused this new high, right, was from that institutional candle after that liquidity raid. So we understand that area as an imbalance. So we say, hey, it has reason to come down here. It has equal lows, even better, right, as well as an unmitigated institutional candle that caused this new high. So I use it as multiple confluences. But as far as entries go, I'll usually only be on lower time frames, like literally the 1 minute or the 30 seconds, 15 seconds, as far as those entries go for liquidity rates to the downside, breaker structures to the upside. An example of where this could have worked, right, on a time frame like this. So we can see we came into this area, broke structure to the upside right here. Here's your institutional candle, but we created a fair value gap, right, following a liquidity raid. And then price continued to the upside after that. But the way I would look at it, right, is after this breaker structure to the upside, let's go to replay mode. So we can throw up the lower time frames, right? If we look on our lower time frames, we can see it came into this area, right, and then broke structure to the upside, traded back into that candle within this institutional candle right here. This is where that low was created, so let's not make it very difficult for you guys to see. Let's actually draw the structure here. So we came up, I came up and then came into these areas. I'm gonna draw this pretty sloppy, but every single wick that I'm looking at counts, right? We rated highs, came down lower, lower high, rated lows now, so now we took out all the sell side liquidity, broke structure to the upside. Did we violate that low? No, we didn't. We created another high, higher low, continuation. It's still that market structure. Let's take away the candles now. Oh, let's just hide it actually. Hold on. Alright, so now that my candles are gone, we can see even though it looks super choppy, we can see we rated lows and then still respected that low that caused a new high, right? And so we saw that continuation overall. First break, second break, came back down into the area of demand that caused that and then continued to the upside. We can use those lower time frames as confirmation. That was just the 15-minute at that point in time. So let's just bring this back. Alright, again, let's go to even lower time frames. Let's take away this. Right, and we can see again where we rated lows and then saw those moves to the upside, right? And then continuously respected that. So after this move to the upside now, I can look on the 1 minute and look for that next area. Created a high. Where's the break? Right here. Where's your candle before that break? Demand zone right here. Right, and now I have this opportunity as well. So it's just understanding that we can get that confirmation from just waiting for those areas to be filled, right? As far as imbalances go and fair value gaps go, I'm not just automatically longing or shorting anyone that is created. Personally, I've found that sometimes, right, it can show that these ICT concepts are putting in a false narrative of every time there's a liquidity raid, there's going to be a reversal, right? We still need to understand our structural narrative overall. Just because there's buy-side liquidity there, right? This is the same for imbalances like I was just talking about. Just because there's buy-side liquidity or sell-side liquidity there does not mean price will seek that. It has to show that structural narrative as well to give multiple reasons for then price to come up or down into a certain area of supply or demand, right? So now that that was shown, right, we were able to then disprove ourselves with these areas right here and get a profitable trade within just this small price action right here, right? That 1 hour candle right here. If we go on the 4-hour time frame or 8-hour or daily, right, this is all we see. We just see this price action right here. Did I have to catch this move to make 10, 11% on my account? No, I did not. Did I have to catch this move? No. Did I have to catch this move? No. We caught one candle, right? 4-hour, 1 hour candle when it hit our take profit, right? It's completely fine. Just understand that you do not have to be in a trade 24/7 because that's only going to bring stress. That's only going to burn you out, right? And that's only going to start to create bad habits to where or when you get into losing trades, right? So understanding our strong highs and our strong lows was something that I personally implemented that was super helpful as far as just simplicity, right? Because I can say, oh, okay, we came into this demand zone and this low didn't cause a new high. So this low is a weak low, so we can expect that low to get taken out. Does that go with my overall structural narrative of it mitigating supply? Yes, it does. Does it show that introduction? Yes, it does, right? And I can go to lower time frames. So it's just confirming it with multiple confluences to give you that confidence to where I can walk away from this trade. Because if I am wrong, I can go back and understand exactly where I went wrong, right? And that's the beauty of these institutional concepts, why I like to teach these and why I like to trade these. Because I personally like that certainty, right? In a game of uncertainty, even though it still is technically uncertain, I like that ability to have that certainty to that point, right? To where I know from this structural narrative that is set up, I'm on the 1 minute, right? From this structural narrative that is set up, when you get this first break to the downside and price comes into this area, to be as safe as possible, like we had talked about before, right? We're break even once this low is taken. Right? I'm break even once this is taken because price should not come back into this area, right, that created that supply zone. Right? It should not come back into that area that created that supply zone. Otherwise, it will be bullish overall, right? If we came back down here, accumulated and continued to the upside, it would show bullish nature, and I would look for areas of supply higher, or I would look for a possible continuation higher. This could have been a liquidity rate downside, right? Break of structure upside internally, and then created more demand and decided to continue higher. Instead, right, we're just following what the chart is showing us, what the chart is giving us. We're waiting till the wave is present so then we can bring our surfboards out there and actually catch those waves, right? Actually catch the move instead of trying to predict the top or trying to predict the bottom, because what's that going to bring, right? That false sense of, I believe I know what I'm looking at, right? It's literally going to bring that, because how are you going to catch every single top and bottom if your mentality is, oh, this is the bottom, I caught the bottom, right? And then you get stopped out and you're like, it obviously wasn't, but where did I go wrong, right? And then you look in your higher time frames and you say, oh, it was bearish the entire time, right? Nothing showed some type of break of structure to the upside like it wanted to go, right? Just understand that we got to keep it simple. That's literally it. Keep it as simple as possible. Don't be on the charts as much as you can, right? Obviously, practice and backtesting and everything is good. Super, super good. That's what I always recommend, right? But if you are constantly on the charts, constantly trying to make narratives and constantly trying to bring something else into trading instead of what it really is, right? Like being as real as possible, what really is trading, right? It's taking money from others. That's literally it. Just taking money from others. We don't make money just because I go in here and do all this analysis. I don't make money. I technically take it from others, right? Just know what the market does, how it moves, why it moves, and that's literally just it. If I understand why it moves, I can see that now visually on candlesticks. I now have the confidence to enter a trade, walk away from it, set my stops to break even once that first low or high is taken, right? And understand that I can make a lot of profitability within a small amount of time and not have to be in a trade every single day. So with that being said, is there any questions that anyone wanted to ask in either crypto chat, stream chat, or if they wanted to unmute their mic, they can go ahead and do that now. If not, then that's probably what I'm going to go ahead and end it off with the stream today. I appreciate everybody that came out, everybody that had the patience, right, went through this and listened to me again ramble about how we can be better, right, how we can actually apply ourselves and back test the right way, right, practice the right way, have good habits at our house, right, because now that I am going to a chart every single day at a certain amount of time, I can create a schedule. This is now a job. I can make this a job, right? Make it a job, because that's how you want it to pay you, right? If you are in here listening to this and you are trying to get better, right, trying to apply these concepts, then you obviously want it to pay you like a job. And that's what we all want to do. So we need to have those steps of confirmation, right? Otherwise, that business will fail. Men talks about a plane, right? Or a helicopter. If you sit down in a helicopter and the pilot next to you only clicks 2 buttons and then says we're good to go, you're gonna be like, are we gonna crash? And then the plane's gonna crash, right? Or the helicopter's gonna crash because he only has 2 steps done, right? Did he click all of them? Did he turn on what he needed to turn on? No, he didn't. He just flicked 2, said I'm good to go, I'm lazy, right? And let's go. What happens? The entire thing explodes. So it's just understanding that we need to stay disciplined. look for the same thing over and over again, come to the charts, right, at the same time, find what's comfortable for you as far as sessions go, and pairs correlated with sessions. But with time and price that we had talked about with the manipulation before, right? It's the same exact thing. Find that time that is right for you. Find when there's that volatility within the market. We talked about certain times in our last stream, right? And then we talked about that 8:30 time within this stream. But as far as that goes, right? Literally just keep it as simple as possible. Now, with that being said, right, I don't think I see any questions. I appreciate everybody again who had popped out. This was recorded. This will be posted to the YouTube. Feel free to ask me in DMs if there are any other questions that you guys have. And with that being said, I appreciate every one of you
Hey,
coming out, and y'all have a good night.
thank you for the stream, brother.
Yes, sir. Anytime,
Let's
man.
go catch Tokyo.
Let's get it.